Phone Jay Streckfuss.
Hey, morning, Facebook folks. Morning.
Or if you manage fleet vehicles, call Jay Streckfuss at Humble Transmission, 281-446-0862. That's 281-446-0862. For brakes, AC, drivability, and transmissions, of course, call the guy I take my own car to, and believe me, you'll see why this is my first and only choice. Personal care and the best warranties, 281-446-0862. Tell them Lyndon sent you.
It's estimated that 9 out of 10 individual investors fight a losing battle against the big institutions. So what can you do about it? Hi, I'm Mary Beth Motisi, owner of Online Trading Academy here in Houston. Listen to Power Trading Hour to learn how the markets really work and how to think and act like the professionals. Call us at 281-820-8905 to register for our complimentary half-day class. Find out more at HoustonOTA.com and listen to Power Trading Hour, weekdays at 2 p.m. on Business 1110 KTEK.
The following program does not necessarily represent the views or opinions of the staff, management, or ownership of this station.
It's time to get on the right path with Right Path Real Estate Radio with Tom Perry and Jason Bible. Get the answer to your question that's keeping you from taking action and succeeding today.
Welcome to the show. That's perfect timing.
Just in time.
Right. Mic check.
Yeah, I'm here. Dude, it took over an hour to get here.
The guys that will put your fears behind you are on the air now. They're taking
All right,
calls
gentlemen, stand by.
785-1817. Toll free 877-881-0271. Here's Tom and Jason.
Hot mics.
Welcome to the show, Right Path Real Estate Radio, 713-785-1817. The title of the show today is Wealth and Income. How to grow your income and your wealth. Jason and I are live in the studio. Welcome.
Welcome to the show.
Yeah, Game 6 of the Astros, not so stellar.
What a weird game, huh?
Yeah, it was weird. Yeah, Verlander seemed to be on. He was pitching well, but enough of that. So, there's really, we were talking about this just the other day, that there's really only 4 ways to make money in real estate. People talk about, there's 87 different ways to buy a house. We have one way to buy a house. We have 4 ways to make money in real estate. That's really just, you can buy, fix, and flip. You can wholesale. You can buy and hold, which is rentals. And you can be the bank. You can be the lender. You can be the mortgage company. And all 4 of those are great strategies. And within each of those strategies, you need to be able to find the deal. You need to be able to analyze the deal. You need to be able to fund the deal. You fix the deal, and then you sell the deal. I mean, that's it. And each one of those has a different process and system in it. So, why is real estate why is it good to get into real estate right now?
Well, I will tell you. Of course, I'm always one that'll tell you it's always a good time.
It's always a great time.
This time in particular, even if you're not in Houston, our credit markets are such that money is plentiful.
Yes.
Probably a better way to put that. There's so much money out there to be able to be deployed in real estate. And so for those folks who want to build wealth through real estate, buying income-producing properties to hold on to long-term, I mean, you're getting 80% financing right now.
Yeah.
Right? So,
but where do they get the other 20%?
Well, if they buy it deep enough, that's where their equity's at.
Right.
If they don't, then they got to come up with the 20%.
So when you're saying you can get financing at 80%, that's 80% of the after repair value, or that's really what it is, or what we actually is the future value, right, after it's repaired.
Right.
Yeah.
Yeah, and and if you're in Houston, Texas right now, it is no greater time than now for real estate, in particular post Harvey. I was out. We do trick or treat every year with some friends of ours in Westbury, and so we're walking around Westbury, and they're giving me the 411 on that neighborhood post Harvey, and it's amazing. People are just up and moving.
Yeah, right.
And so that's presenting opportunities for certain folks in that neighborhood to buy rental properties. I actually talked to a guy we were watching the game with last night, and he's been there since 87 or 82, I can't remember. And he owns a bunch of rental properties over there. And he lives there too. Right. So he's just buying more. This presents an opportunity when people don't, investors have to step in when the retail market steps out,
Right.
right? Retail market collapses, investors have to step in and support that market. And so that's really what we're doing.
When you said something yesterday, I thought was really good. It's because it nails what the value that investors, because sometimes investors are called vultures, right?
Yeah.
And it's like, no, we're the ones that provide the liquidity for an asset that's really not that liquid. A stock, an Exxon stock, is very liquid. In fact, by the way that the market is set up, there is always another side to whichever side of the trade. There's always a market maker for every stock on an exchange. There has to be a market maker. So now the market maker gets to set the price, but there's not a market maker in real estate but investors. So by the same token, investors provide that liquidity on the other side, and the investor gets to set the price. So we're really the market maker for the real estate market.
Absolutely. It's speaking of which, I just had to pull up the Dow real quick.
Yeah, sure.
I was listening this morning that things are looking really good. Some earnings reports are supposed to come out today, and we're not a stock and
We're
that
not.
sort-
We're kind of
that sort-
anti-stocks.
We're just a real estate show. But it's interesting to see all the irrational exuberance, as Greenspan once put it, before the 2008 crash, with regards to what's going on in the capital markets. Somebody told me the other day, they said, hey, you ought to look up the PE ratio for Amazon.
Yeah,
I'm like,
right.
You know what? I need to do that.
Well, it's nearly impossible to define, right? Because they're not.
They finally started making
Yeah,
money.
finally started making money, right? But for years and years, it was undefined, right? Because you can't divide by zero
Yeah.
or a negative number,
Yeah,
right?
it's a negative PE, right?
Right.
But in any case, I always thought it was fascinating that folks thought that investing in real estate is more risky than the stock market, and I always laugh at it. And then I'm like, well, I shouldn't laugh at it. It's just a lack of education,
Right, sure, right.
Because it's not real. It's not more risky.
Yeah.
It's my book.
Well,
the
it's
way
like
I
when people
measure
say
risk.
it's more risky to fly than to drive in a car. And it's
Yeah,
like
that doesn't make any
the
sense.
statistics don't bear that
No.
out, right?
Yeah, most workplace injuries, you're more likely to get killed in your car than you are
Right.
doing anything else at work. So it's anyway. So go back to managing risk. It's a lot easier for me to look at a house that cash flows $300-$500 a month and buy that versus going in and buying an Apple or an Amazon or something like that. So for me, it's pretty simple. I mean, it's real estate makes a lot more sense. And you can apply leverage to it, which is nice, if that's something you want to do. Not everybody does. So it looks like we've got a question here about
Yeah.
fast track stuff.
Well, it says, good morning, guys. What's the current lead time for Fast Track or any other rehab company to start working on the property since the moment you hire them? Heard it may be several weeks, so you want to add them to the whole time calculation. Last time Fast Track was on here, they said they were running about 9 days out, which, by the time you get the property under contract, you're going to know when your closing date's going to be if you're going to fix and flip that house. So I don't know that it's going to really add any hold time because you've got plenty of notice. You'll get in the queue with them from the time you contract it. Just say our expected close date is this date, and then they could start within a few days. 2 or 3 days. So I wouldn't say that that's affecting the calculation at all.
Yeah, it's if you are on top of your game, I'll tell you the real way to do this business is you get a property under contract, you take that property to closing, but while you're taking, so in other words, you don't own it yet. So while you're taking that property to closing, you're doing a couple of things. Let's say it's a rental property. Go ahead and start marketing that property for lease. Yeah, you heard me right. To market that property for lease, even before you close on it. Then by the time you close on it, your GC, Fast Track, is already in there doing the rehab. And then while you're screening tenants, they're finishing up the rehab, and then you can immediately go in and rent that property out as soon as the rehab is complete. So the idea is that, typically when you have a house under contract, you're not going to close the next day. Now, we've done that on a number of properties, but most folks don't. You've got a 2 to 4 week close. That allows you to set in motion a number of things. So even if your GC is 30 days out, you've got it under contract, you've got 30 days to close or 2 weeks to close. You're no more than about 2 weeks out before the rehab starts. So that's how I would manage it. I would keep my ear to the ground with regards to when properties or when general contractors are able to get stuff closed or when you're able to get things closed and they're able to get started. Let me put it this way. Most folks who were flooded have not gotten their checks yet. How do I know this? They're still sheetrock at Home Depot. We're just now starting to see the first trickle, if you will, of checks coming in from FEMA, from flood insurance. As that continues to increase, more people are going to have, there's going to be a lot of cash sloshing around in the system, if you will. And you're going to start to see general contractors get more and more busy. You're going to start to see material prices possibly increase, although I hear that shouldn't be the case. But I will tell you for a fact, labor prices will increase. Now, when will that happen? I don't know. But I can tell you, as demand increases and supply stays the same, prices will go up. It's just a natural supply and demand curve. So just be aware of that. And that's going to happen here in Houston. Whether it happens a week from now, 2 months from now, I don't know. I can just tell you it's coming. It's just like I can tell you that in certain submarkets, there's going to be a reduction in the value of these houses. How do I know that? Well, I know a lot of these homeowners are not going to stay. They're just not. I mean, we've talked to a number of homeowners. All they're trying to do right now is figure out how much their insurance check is for and when they're going to sell. You're going to see distressed, physically distressed properties on the market. That will absolutely have an impact on appraisals.
2 minutes.
The second thing that we're going to experience, and it's not going to happen for the next 12 months. It'll start in about September 2018. And that is people and houses. Got to keep this in mind. There were 266,000 houses impacted by Hurricane Harvey. There are a number of untold houses right now, untold households whose businesses disappeared, whose lifestyles were erased, and their houses are just fine. However, their financial means for making money, their income, was taken out with the storm. And those houses will end up on the market as distressed assets, as foreclosures. So you're going to have two things that come on the market next year. Houses that are going to be foreclosed on because they did not have flood insurance, and the house is in disrepair, physically distressed asset. And then you're going to have a group of homeowners whose livelihood was disrupted from the storm, and they weren't able to financially recover, and they will ultimately lose their homes. You're going to see a double whammy in the next probably 10 to 12 months. So be prepared for that, guys. This is like 2007 all over again. We can see the train coming. The train is a-coming. Choo-choo, like at Minute Maid Ballpark with a home run. The train is a-coming. And we know it's coming. It's about 12 months out. So get ready. Got to be at our weekend retreat. Learn how to do real estate the right way. We get back from the break. We're going to talk more about how to build income and wealth with real estate. It's Jason Bible, Right Path Real Estate.
Mike's off.
I picked up a cold from somebody. Oh, no. Yeah. I had it yesterday. But
doors that stick, or sheetrock that's coming apart, then you may have
Heather Lee, she's back. First time since Friday, and she doesn't think she's going to make it the whole day, but that was just digestive related.
Oh, thanks for sharing.
Right.
Yeah. Thank you for sharing.
We're not in the business of repairing foundations or selling you unnecessary paperwork.
Uh-oh. I see Chad Lauer is on the thread. Hey, Chad, when are we supposed to do that networking event in Vegas? I guess we got to pick a night. Go ahead and book the brewery.
Before ever repair. Call 346-702-3825.
Yeah.
That's 346.
Yeah, rather bet on myself every day of the week in real estate. Absolutely.
Or you can reach us online at foundationcheck.com. That's foundationcheck.com.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that. You need a quick turnaround on quotes or binders? The agency for that is Benchmark Insurance Group of Texas.
So an hour to get in, huh?
Yeah, it took an hour to get in. It was crazy.
You know, I hear there's some houses available a little closer there.
Well, we had that conversation again last night.
Did you?
So jump in the truck, I fire up Waze, and then it says, there's a wreck. It's going to take 21 minutes, an extra 21 minutes to get to the office. And I'm like, you got to be kidding me. So then it takes me through meandering up, it's not Kirkwood. I got off on 90, then took...
Was it Dairy Ashford?
Yeah, I think it was coming up through Dairy Ashford. It was a total mess, and then came back over the Beltway. just was not great. So that's what I was telling this buddy of mine last night I was hanging out with, and I'm like, hey, I said, I've always really liked Memorial. And he's like, Memorial's a pretty sweet side of town. He works for
offering up to 100%
oil and gas company right here in the energy corridor. His wife works in Indiana Anderson, so he's like, I'd live in Memorial if I didn't, because, literally, his office is across the street from here, right? But his wife works in the med center, so he's like, Westbury actually works out pretty good for them. But I said, well, Sarah works from home, and my office is right here. At least it is for right now.
In addition to private money, Noble Mortgage offers conventional
Well, I still like this side of
loans,
town
FHA,
just for
and
anything
even
we're going to do in the
no-income
future.
Oh, yeah.
So
I
easy.
think we'll end up somewhere over here.
And commercial properties. Call and ask about our 5-point guarantee, which includes free pre-qualifications within 2 business days. Call 713-680-8100 or visit noblemoney.com. That's noblemoney.com. Our team has over 50 years experience in the mortgage industry. Call us today, 713-680-8100, or visit us on the web, noblemoney.com, noblemoney.com.
NMLS 292143, 8203 Willow Place Drive, Houston, Texas, 77070.
Are you looking for an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
That's awesome, Jeff.
Remodeling specializes in
Did you see Jeff's comment?
remodeling of single-family investment properties.
Is he watching?
Whether it's a flip rehab or a rental rehab, we manage every aspect of a rehab from start to finish with a highly efficient, standardized process.
Over the last 6 years, Fast Track has completed over 700 projects, which has helped us to create our 3 keys to success.
I'm going to warn you, Jeff, that blunt real talk.
Yeah.
Maintain quality crews so it gets done right.
It is a double-edged sword,
It
right?
is.
Right.
No more managing it yourself.
I sent an email to a dude yesterday, and I just basically said, hey, this isn't for you. There's really no point in you coming to our events anymore. You don't get it, man.
It was really polite, though. It was very, very polite.
My first draft was not so polite.
This is Business 1110. Call Jason or Tom at 713-785.
In fact, it was so polite that even if the guy were listening, which I doubt he is, that he wouldn't know that
He's too busy buying houses.
No, or not.
Yeah, right.
Stand by, guys.
Hot mics.
Hot mics.
Hey, welcome back. Right Path Real Estate Radio, 713-785-1817. We've got people following us on the Book of Faces. That's Facebook.com. Go to our Right Path page. Just like it, and then you get a notification every day when we pop up on the air. We also have podcasts on TuneIn, on iTunes. Go to our rightpathrealestate.com website. You can see all the places that you can find us, all the podcasts, all the websites, all of that kind of stuff. Just rightpathrealestate.com.
We're on the YouTubes, too.
Oh, the tubes.
The tubes.
Yeah, the tubers.
We're on the internets.
We're tubers.
Yeah.
Yeah, we're up in the clouds.
Yeah, YouTube stars.
We're in clouds.
February would be 2 years for the radio show. And
That's
it's
crazy.
amazing how big this thing's growing.
Yeah.
It is pretty cool. So,
Nikki, we're about the same as we were 2 years ago?
No, you're much better.
Much better. She said marginally better for those who couldn't hear.
Marginally better, yeah. Yeah.
Although, we're doing ads now on all the big radio stations here in Houston for Right Path, and I could shiver to think if, like, Sean Pendergast listens to our show just to see what we sound like, and he's like, God, that's going to be terrible. Terrible on the radio. Anyway, so building income and wealth through real estate. I want to be the first guy to tell you guys, look, I'm not one to tell you to run out and quit your job.
No, absolutely not.
Quit your job. You need to be your own boss.
Yo, you got to put it to the man.
Yeah, put it to the man. You got to be an entrepreneur. Here's the problem. When you start signing up for these real estate things, if you have Facebook, they'll start marketing to you all these Facebook things, right? So you'll start to see the guys that are driving like the Lambos and the Ferraris and all that nonsense. And they're like, you need to be your own boss and make it rain at the club. And it's so funny because we know some of those guys and they're broke.
Yeah, right. Yeah.
Yeah. Anyway, so
they have enough money. They'll sign up a new coaching student for X number of thousands of dollars, and then they go make it rain in the club, and then they're out of money again.
They're out of business.
Right.
Yeah, it's amazing. Or there's or I'll tell you what's been really fascinating since Hurricane Harvey, how quiet some of the real estate investor Facebook groups have gotten.
Yeah.
Because there are people that weren't insured and didn't have enough capital to self-insure, and they'll be filing for bankruptcy. They'll be going through foreclosure. There are some hard money lenders, not associated with this show, or our partnership program, our partnership network, which is what we call our vendor program, that are not going to be in business anymore. I mean, we just know
So
that.
I'm in a little bit of a snarky mood.
Yeah?
Yeah. And so might poke the bear a little bit here, but not. But there's a somebody was trying to put together like a I won't call it a battle of the gurus, but it was like a comparison of the individual. Wanted to invite most of the gurus in Houston, right?
Yeah.
To one event, and I was really surprised that only 2 people have said yes to that. And
no, that's a different thing.
it is?
Yeah,
Okay,
no,
all right, good.
there'll be a
All right.
half dozen.
Okay, good. All
There'll be
right.
like a dozen guys
All
there.
right, just want to make sure that that's not the same thing. So when you were talking about that, so then what's the event that you're talking about?
So the event I'm doing tonight is a forecast 2018 stuff. So they're trying to get ahead of everybody else doing the 2018 forecast. So that's what I'm doing.
That's a webinar, right?
No.
No,
That's a
that's
live
a live event?
That's a live
Okay.
event. And then we're doing
And where's that going to be? Can we announce where that is?
I don't. To be perfectly honest, I don't even know.
Okay.
I'll look at my calendar.
All right, sure.
We'll announce it at the end of the next break. But then the next event I'm doing is that Guru event, and there'll be a dozen of these.
So do we know
guys
how many
there.
people have accepted that?
I don't know. It's 7 or 8 right
Okay.
now.
Oh, okay, good. All right. Okay.
But it'll be interesting because I'm just, my whole strategy for this. We teach real estate education, but the reason we teach this stuff is that we know that our net worth, our future net worth, is predicated on the size of our network. And you hear that a lot, but I want to give you this caveat. Your network determines your net worth, provided that your network is actually doing something.
Yeah, right, yeah.
That's the thing people don't get. It's like, well, I know more people, therefore I'll make more money. Not really. Those folks that are in your network need to be active in this business.
Right.
To give you an idea, inside our Basecamp and Pathfinder group, which is really our client base for Right Path, we've got about 60 people in there. We will buy, fix, flip, wholesale, and rent 1,000 houses next year.
I think that number's probably low.
It's probably low. So
Yeah.
out of 60 people, we'll buy over 1,000 houses. That will make us the largest home buying group, I would guess, in the state. Even hedge funds are not buying that much real estate in a single city. They'll buy 60 or 70 houses. They're not buying 1,000 houses a year.
Yeah, we know a hedge fund guy from up in Dallas, and he's buying 60 or 70 houses a month in Houston, which puts him at about 800 and something houses a year. And then
So that's what we'll end up doing in Houston. That's just based off the people that are in our group now, not the people that we start interviewing and bringing in the future.
Yeah.
A lot of these folks think that, oh, well, you guys are doing this for, the coaching stuff and all that. And I'm like, no, we're building this network. Our whole idea is that we're going to build a network. You're going to be in our group. And when you're in our group, we're actively trading money and properties back and forth to each other. So, Tom, you got an IRA. You'll lend that to Bob over here. And
Right.
Bob is a wholesaler, and Bob is going to wholesale you a deal for your single-family portfolio. That's what we're doing.
Right.
We're building this little group where we generate all our own money and all our own deals. And then when everyone's kind of hit their goal, like, coming into 2018, I personally want to put 2 rental properties a month into my portfolio. And we get that machine going where it goes from, let's say, 2 to 4.
Yeah.
I mean, and it's all inside our group, and I'm managing all the marketing for our group. And Tom, you're helping them with all the sales for that group. I don't see us doing a whole lot more events. Like, if we get 200 or 300 people that are in our group, and we're trading all these deals back and forth, and we're trading money back and forth, and contractors and all. I mean, I don't want to say we're going to close the group up, because I think we'll still do the radio show, but we're not going to do the events like we do now. It's like we may open it up a couple of times a year. Hey, come on down to the weekend retreat and that sort of thing. So this idea that you can wait.
The pathway to wealth.
Yeah, the pathway to wealth. That's right. The idea that you can wait. Oh, hey, Jason, I'll just go to your next weekend retreat. I'm like, dude, well, I'm not doing this forever.
Yeah, right.
We're not building a real estate education company that will be here 25 years from now. At least not in the way that it's done now. We're going to have a small group of doers. That's what we're looking for, a group of doers. So I'm totally on board with your network is predicated on your net worth, but that network has to be busy. I can tell you right now, we could put together a networking event in Houston. Actually, we can do it nationwide. And I can have 300 or 400 people at that networking event every single month. We do the free booze, we do the free food, and there's nothing wrong with that. But here's the problem. 97% of those people that show up will never do real estate.
Right.
That's the problem with our industry. And don't get me wrong, and if you're one of those folks that are listening to the radio show and you've been in this business for 4 or 5 years and you've done a couple of deals, hey, that's great, but you're not the person we're looking for. We're looking for somebody who wants to get active, really active, buy a lot of houses, take charge of their investing future, build income and wealth in real estate. And you're not going to do that by 1 or 2 houses a year. You really got to be active. You've got to get out there and go get it, especially now. And that's really what we're looking for our events. And I just don't think, long term, are we going to do this for 20 or 30? No, I mean...
30 for sure not.
Yeah.
20, 25 sure. Probably not.
One of the things I like to say is, why are you waiting?
Yeah, right.
Like, why wait?
Well, what's interesting is when I look at the timing of the market, when I look back to when's the last crash that I remember, like what's the first crash that I really remember? I remember the crash of, 86, 87, 88. It was the Tax Reform Act of 1986 that really did away with the savings and loans of the day. And that's where we're used to get mortgages. So just going back historically in real estate. And the difference then versus there was a crash then in real estate that you were able to buy properties for 50 cents on the dollar or below. The difference then was that normally it's a financial crash that causes the real estate market to blow up. And when the financial crash causes the real estate market to blow up, the credit crashes also.
Right.
So this is an unusual time in that you've got an asset class that the values have crashed in certain markets, but credit has not crashed. So what an unusual situation in terms of historically, because if you wanted to go in, the only way you really could have gone in and taken advantage of that crash before is if you had a ton of cash.
Yeah.
So it's a little bit like, when you see a great stock market opportunity and you're fully invested in the market crashes, well, you have to sell some stocks at a loss in order to buy. Well, you can't really take advantage.
You can't take advantage.
You have to be sitting in cash in order to take advantage of that crash, right? And most people aren't. So the same thing in typical crashes in the past, you had to be sitting in cash for the crash to happen because you couldn't get the credit. Now it's not that situation.
It's a physically distressed market and it's regional, which is really unique.
It is.
Very, very unique. And this is not like Katrina, Ninth Ward.
No, right, yeah.
This is some of the nicest pieces of real estate in Houston that are distressed right now. And so it creates this really unique opportunity.
I think it's once in a lifetime.
I'm trying to think the last time it happened on this scale. I mean, even Ike and Tropical Storm Allison weren't this big.
No, right.
And I can tell you, chatting with Robert, I had Robert on the show last week, and he talked about the stuff in New Jersey with Hurricane Sandy. And he said, they're still picking up deals, but he said the difference is, in that area in New Jersey is not like Texas.
Right.
This is going to happen. It's going to be here and gone.
Right.
It's going to be so quick.
It's less than 2 years.
And I'm telling you, all of the guys who are serious about this business, the guys and gals that do this, are kicking themselves for not buying more in 2008. And we're about to enter a 2008 market in certain submarkets. If you're sitting around waiting, you're going to miss it. And you're going to go, geez, I should have joined Right Path. I should have gone to the weekend retreat so I could figure out how to buy these things at a discount and get my hands on everything possible. But I'm telling you, this is when all that wealth is made. I've met a couple of guys that, they only work in markets like this, and then they disappear for 10 years.
Yeah, right, yeah.
And then they show back up and they buy houses. So when we get back
what
to
do they do for those 10 years?
Enjoy their money.
Yeah, we're going to talk about the comment on Facebook. We're going to give out the location. Actually, I'll give it out right now. 2712 Southwest Freeway is where the event is tonight. It's the Crown Plaza, 2712 Southwest Freeway. Zip code 77098.
I'll be doing market predictions for 2018. So when we get back from the break, we'll talk more about how to build wealth and income. Real estate. It's Jason Bible, Tom Perry, Right Path Real Estate.
Mike's off.
And here's what I'll tell you about this event tonight. It will be over for Jay Bible by 7:20.
You know that there are over $24 trillion in retirement accounts in the U.S.
I don't know what time it starts.
Imagine
One of them starts
if
at
you
like
could
7.
Use someone's IRA to fund all of your deals. Well, you can. Quest IRA is based locally here in Houston, Texas. At Quest IRA, we offer retirement accounts that can be used to invest in real estate, promissory notes, private entities, and much more. Many of our clients loan money from their IRAs to fund real estate deals all over the country. We don't sell any investments or give
You know what's the
advice.
worst is
However,
when
we
you
do
feel like
hold
this and
free
you drink a
networking
beer and
events,
it's like,
weekly educational classes, and free consultations with an IRA specialist. For
Did you
more
boys stay for the whole game?
information,
We
visit our
did.
website
But
at
that was fun.
It was Colby, Andy, and Philip and I.
Andy
Helms,
off
yeah,
that? Okay,
yeah,
and
yeah.
Philip, that's fun.
Yeah.
I bet that was fun.
Yeah. And I had a few too many jalapenos on the nachos last night.
Yeah, I don't know what it is. Like the last 5 or 6 years, I can't eat real spicy stuff.
Yeah.
It just
It didn't really bother me going down.
The condition of the home and your potential return
Yeah.
on investment. Principal Inspections was founded by investor
Yep.
Jeremy Humphrey to do just that. Working from the investor's point of view, Principal
Man,
Inspections
Jeremy
is
is
turnkey inspections
he
that are
is
high
awesome,
quality,
and he
affordable,
totally
and
gets it.
focused on
He's
information
Jeremy has really
for
pretty much set up his
investors
inspection
while not
company a lot
clouding
like I set up Fast Track, just
Oh,
investor
sweet.
only. It's just he totally gets it.
and then you just turn into a puppy.
Yeah,
man.
right.
Just-
And now he's an investor also.
oh, awesome.
Yeah.
So I bet he walks in.
Well-
Well, so you won't do this deal because this guy right here will do it.
Because he said he did like 2 deals last year was all, but he's got 5 under contract right now.
Awesome.
Yeah.
I love it.
Yeah.
I love it.
Save you time and money.
I love
Call
it.
Principal Inspections 832
Hey, good morning, Michael.
5516. That's
Hey, and
832
Lewis, thanks for that.
5516. Or go online to principalinspections.com. That's Principal Inspections.
Is it just him, or does he have a couple inspectors?
He's got 2 others.
Oh wow.
Yeah.
Yeah. So he can really churn them out.
Right.
Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating.
You know what's
risk.
crazy? I'm looking at our
This is
post
exactly
reach and
why
some
we
other
started
statistics.
Yeah.
It's 125,000 that are reading our posts.
Yeah, so I was calling yesterday to talk to my friend that's, you know, I've probably known longer than anybody since 3rd grade. And so they did a school project. There was some company that was coming in. They were kind of like gurus on, you know, reach of Facebook and all these other companies. And so they had them kind of as a school project do research, and we were the case study apparently on.
Really?
They looked at our account and they said, "You guys are just killing it in terms of your reach and stuff like
Yeah.
that." They're like they were measuring the metrics, and they're like, "Whoever you've got that's doing it really knows what they're doing."
That's pretty awesome.
Yeah. I didn't find that out till last night. I called it. His birthday was yesterday. I called to wish him a happy birthday, and
Well, what's amazing
Are you
is, and I need to
expecting
pull
to
some of
close
this stuff up.
accurately, on
Our
time,
organic,
and with lots of communication
our
on
organic
your
keeps
home
growing and
purchase?
growing,
You've come
and
to
then
the
we
right
add
place.
paid
I'm
search on
Jennifer
top of that. It
Hernandez,
just
senior
boom!
loan
It just
officer with
blows it.
Legacy Mutual
You know, it is
Mortgage.
like a
Our goal
multiplier.
is
It's
to
real
give our
interesting to
borrowers
see.
and referral partners an amazing experience during the loan process.
habanero
My
cheesecake,
team
guys.
believes
No,
in
not so
putting
much.
people and
You make it.
culture before
Oh.
results. Our company concentrates
30
on building
seconds.
those teams who operate with structure, process, and recognition for
Yeah,
going the
Robert,
extra
it might be
mile.
different tomorrow morning
This way, we
when the
have energy to make
Astros
this your best home purchase
take
ever.
it away.
Give us a call today to find out the simple steps to
Yeah,
get started.
LA hadn't won a
I'm Jennifer
back-to-back game yet,
Hernandez,
right?
The Hernandez team at Legacy Mutual Mortgage.
This is Verlander's first loss.
Yeah,
in
since he's been with Houston.
Yeah.
So who's going to the mound for Houston today?
Keuchel.
Okay.
I'm pretty sure it's Keuchel. No, let me back up.
Mutual.com.
Everybody.
Yeah, right. Yeah, right.
It's the last game.
You're right.
Everybody's suiting up. 12th man.
Yeah, right. Yeah, no joke.
Here is Tommy Johns. Man, we can get that surgery done, get you whipped into shape by the middle of next season.
Jason or Tom at 713-785-1817. Or look for us on
Who's going for them? Is it Kershaw?
I think so, yeah.
Oh, yeah?
Which I'm like, let's
Yeah.
do it. Let's do it.
All right, gentlemen,
Okay.
stand by. Hot mics.
Hey, welcome back. Right Path Real Estate Radio, 713-785-1817. If you've got any questions about how do you find deals, how do you fund deals, how do you analyze the deals, how do you fix them, how do you sell them, whether it's buy and hold, buy, fix, and flip, whether it's wholesale, whether it's being the bank. You know, I know that there's some people that you know, that's what they do is they listen in and they're like, man, you know what? I want to invest in real estate, but I want to do it really passively.
Mm-hmm.
So sometimes we get calls, hey, will you partner with us, things like that. We don't really do a partnership, but we do a lending arrangement. I mean, we fund all of our deals. This is not a solicitation for money, but we fund all of our deals through private money lenders. And people typically lend out of their IRA. That's one of the things we love about Quest IRA. There's plenty of people that, you know, will lend out of their Quest IRA account. And let's say we're buying a house for $120,000, it needs $50,000 in work, but it's worth $300 when it's all said and done. Then, you know, we borrow the $120 at purchase, and they set aside the $50 for rehab. We do draws as we complete rehab. So they have a first lien position. That's typically how it works. You get a first lien position, and it works that way whether we're doing it or one of our students are doing it, because that's what we teach is how we do it. And we've bought, fixed, and flipped over 450 houses in the last 4 years and some change. And the message that you really need to grab a hold of today is that if real estate is not part of your investing portfolio right now, there's only one of two reasons why that is. One reason is that you don't believe in real estate, which is just crazy right now. It just means that you're not studying the marketplace. The other reason is that you haven't really thought about it. It's just that you've got your investing strategy so much on autopilot. You go to work in the morning, you leave work at the end of the day, you're in this routine, which is kind of like a rut, right? Mm-hmm. And you just never even think about it. And what's sad for me is that people oftentimes spend more time thinking about planning their vacation than they do their overall financial future and health. And so if you're, it's almost like I want to shake people through the airways, just wake up, folks. This is an incredible opportunity. Just get out of the rut that you're in.
Here's the amazing thing. You can go buy a house right now.
Yeah.
And capture on a $150,000 house, let's say you're all in at 80%.
Yeah.
Meaning you have 20% equity. You can have a house that you buy with no money out of pocket, with $30,000 in equity, and cash flow you $400 a month. I want you to think about that for a second. $400 a month, $30,000 in equity, one house.
Yeah, and you could do that in less than 90 days.
Yeah.
What stock can you buy that's going to go up $30,000 in value?
Well, it's got to go up 20%, right?
It's got to go up 20% in value in 90 days, and is going to pay you a dividend of $400 a month.
I don't know of one out there with it's a $120,000 investment, right?
Right.
So it's like it doesn't. There's no comparison
that you can borrow the money.
That's right. You borrow 100%.
Right. You can borrow all the money to do it. And
when I first got in this business, I remember sitting across from a guy. I said, "Let me get this straight. A bank will give me 100% financing. Yes. So I'll have no money out of pocket. None of my own money in this deal. That is correct. And then I'm going to capture $30,000 in equity. That's right. And it's going to make me $400 a month. Yes. So what? And I'm looking around. I'm like, am I missing something here?
Right.
It was kind of like my old employer. So my old employer would pay for graduate school.
Yeah.
And then when you graduated, they would promote you and pay you more money. And I'd say, wait a second, you're going to pay for my education, and then when I get done, you're going to pay me more money. Yeah. So where's the downside? And I'm looking around, I'm like, okay, so how much education exactly will you pay for? I mean, it was like that.
Yeah.
It's like, this is so simple. And why people don't do it, I've never understood.
Yeah, so it's like, okay, there's a mountain of gold over here, and we're gonna give you the shovel.
Yeah.
And we're gonna pay you to go and shovel as much gold into your own
backpack as you want, right?
Right.
And I go, okay.
And then when you leave, we're gonna pay you for the amount of gold that you collected.
That's right. That's right. Yeah.
Yeah. So I don't know. That looks like a lot of work to go over there.
That's the problem.
Yeah.
They said, look, you can have all the gold you want. You just got to shovel.
Yeah, right.
And I was like, well, I don't mind shoveling. While I'm here, I might as well shovel anyways, right?
I don't know. Maybe I'll wait till the sun goes down and shovel at night. Yeah. That'll be easier.
But then that new TV show or whatever is coming on at night. So I don't want to shovel at night either.
Right.
I'm not really interested in making any money. Hey, that's fine.
Yeah.
That's fine. There's a reason it's called the 0.01%.
Right.
Because the 99.9% are not in that group, right? So that's what it takes. It takes hard work. All you got to do is work, guys. It's not.
Well, I think the rest of the story that you're not telling right now on that is that the shocking part is, well, here's the thing. They probably only offered that to you, right? That you were like a special employee.
Oh yeah, I was just a special employee.
Yeah, so they didn't offer that to every. I mean, like, how many employees worked there at your old employer?
5,000.
So. But they only they don't offer that to all 5,000.
No,
that was to you and not the other 499.
Yeah. In our employee handbook, it was just a little carve out.
Says J Bible.
Says J Bible.
Yeah.
Is the only one.
Special provision for J Bible, chapter number 72.
That's right. It's kind of like the real estate market. Only Tom and Jason are allowed to buy these deals. There's no other deals for anybody else.
So 5,000 employees that have a free, because people right now. I mean, I know people that will go into debt
Yeah.
I mean, like $80,000 to get a sociology degree, which makes them it qualifies them to work at McDonald's or Walmart, right, as a greeter, and but doesn't actually provide a direct path to a real job, right? But at least they have their degree. They have that piece of paper, right?
That's right.
So they'll go into debt $80,000, $90,000, $100,000 because the government's willing to guarantee a student loan, and now that affects their credit and everything from now on. Now basically, I can't say it on there, but their life is really it rhymes with trucked.
Yeah,
they're really messed up at that point, right? And so. But they're not willing to go out because that's not the only employer that offers that as a benefit.
A bunch of them offer
I mean, if you really wanted to get an education, why wouldn't you do research on the companies, the employers that provide that kind of free education? Go work for those folks, get a free education. Now, out of the 5,000 employees, how many people do you think took advantage of that over a period of time?
Would not shock me if it was less than 1%.
Which is about, let's see, on 5,000, 10% would be 500 people. 1% would be 50 people.
Wouldn't shock me at all.
Yeah, that's crazy.
And what was so interesting is much like real estate, I was just capitalizing on that opportunity,
Right.
So then I'm 28 years old. I'm the risk manager. And I'm going to these risk management conferences, and most of these guys are in their 50s. And I'm looking around the room, and I'm like, this is the result of taking advantage of opportunities. And I told myself, take advantage of opportunities. It's one of the reasons I had a fantastic career. I didn't get downsized. In fact, I still get phone calls from recruiters.
Hey, we've got a caller on the line.
Oh, okay.
Hey,
Anyways.
so want to go first to Robert as a caller on the line. He put his fear of calling behind, and then we want to get to a Facebook comment that Lewis just made, and he's asking a question there. So, Robert, welcome to the show.
Thank you. Could you give me a quick thumbnail sketch or what makes you salivate over a good single-family residence deal for buy and hold? Is it like we're looking for 322s, 1990 newer construction, good school district?
I don't know that the 1990 construction really matters to me because I'm going to bring the house up to new construction, state. I'll give you an example. I was going with a student, went out on a sales presentation with him, one of our one-on-one students, and the deal pre-flood was probably a $185,000 house, which is a more expensive house than what I would normally want to buy as a rental, right? Because one of the things that we really like is are we getting greater than 1% of the ARV or the value of the house, as rental on a monthly basis? $185,000 house, I want to get $1,850 a month or greater, right? But $185,000 house that really got about 3 feet of water in it. And so the seller's willing to walk away. We made an offer of 87 that he's going to take, and it needs 30,000 in repairs. So we're all in for 117, and it's probably dropped in value. I'd say 15%, let's say, in terms of the ARV. It's no longer a $185,000 house, but rents in the area, because there's good jobs, there's good schools, it's all of those. I'd love to own 1,000 houses like this, and it's gonna rent for $1,600, $1,650 a month, something like that. I do that deal all day long.
I'll tell you, when someone says, "Hey, I'm looking, what's a good rental property look like?" and I tell them it's real simple: cash flow and equity. Cash flow and equity.
I'm capturing a minimum of $40,000. If I downgrade that 185, and here's the thing is, 3-4 years from now, Houston's got a short memory, right?
Yeah.
What year was Allison? Nobody remembers.
No.
A handful of people remember what year it was, but most people don't.
But this is classic Texas. We don't care. We'll knock a building down and build a bigger one.
Right.
We just don't care.
so in 3 or 4 years, it's going to be worth $185,000, $200,000. It's a 2,100 square foot. It's a really, really nice house. It's a house that almost anybody would be willing to live in, right? And so that's going to come back. But even if I say, hey, it's worth $150 now, I'm all in for $110. Minimum equity I'm capturing is $40,000. Minimum cash flow I'm capturing is $500 a month. You can't go broke doing that. In fact, you can get really, really wealthy doing that time and time. That one deal is not going to make you rich. But do you realize how many
of those, right?
But really, do you realize how many people work? What's the median income in Houston, Texas? Do you know how many people work an entire year to make $40,000? and you do that on one deal, and yeah, I can go to a private money lender or a hard money lender and borrow 100% of that money and then refinance it out.
1 minute.
I'll tell you, when I was working out in the real world.
Hey, Robert, thanks for your call.
When I was working out in the real world, one of the things I always looked at is, hey, if I want to raise, I just buy another rental property.
Yeah, right. Hey, so Lewis on the Book of Faces asks, in that strategy, buying cash flow properties, what banks are you using, or is it just hard money lenders and then getting it refied?
Yes.
Yeah. So it is using hard money or private money and then getting it refied.
You go and you actually get two loans. You get one to acquire the property and rehab it, which is a short-term loan, about 6 months, and then you do what's called a rate and term refi. And when you refinance that loan into a long-term 30-year fixed-rate loan, just like your single-family house that you live in, it's no different. It's the exact same loan. So that's how we do that. Now, I've got some folks in our group that are doing 15-year loans, and essentially what they're going to do is after somewhere between year 7 and year 9, sell half of their portfolio and pay off the other half, which is really slick when you get right down to it.
I mean, what would your life be like if you bought 100 houses over the next, let's say, 2 to 3 years, right?
Mm-hmm.
And you kept those for 10 years, and then out of the 100 houses, you sold off 50, paid off the other 50, and you had 50 paid-for houses bringing in $1,000 a month. I mean, could you live on $50,000 a month the rest of your life?
I could try.
I mean,
trying to do
if
it
you
now.
budget
I just
right.
don't
I mean,
know.
if you budget right.
Just don't know, guys.
I mean, you can't go crazy, buying islands and stuff like that, but if you budget right, you can live on that. All right. Let's go to break.
That was a gentle break.
Yeah.
Rehab loans,
I cannot find this. Sarah wants this hoodie, and I cannot find it.
Is it on MLB? Yeah, it's that one there, isn't it?
It's like this, but it's more like a T-shirt than it is a sweatshirt.
Yeah, I know which one you're talking about.
It's the one all the players are wearing. And it's kind of that blue, but it's like a marble blue.
Yeah, I know what you're talking. Is that on it?
No, that's not.
NobleMoney.com.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that. You need a quick turnaround on quotes?
Actually, they're saying Darvish versus.
The team at Benchmark understands the investor mindset.
That is not Keuchel.
No, it's not.
I thought he was pitching tonight.
Call Houston's leading real estate risk management experts. Benchmark.
Everybody's pitching tonight.
281-569-4353. That's 281-569-4353. Or online at benchmarkbroker.com.
Selecting a foundation company and their product for repair is a lot like a game of chance. You simply don't know what you're going to get. The foundation repair industry as a whole doesn't carry a license, nor is it regulated.
Man, that's tender.
Foundation Check utilizes professional engineers to review all of our files to give you the best foundation analysis in today's market. Remember to check before ever.
What's interesting is, notice that a lot of these jerseys, they only have the number on the back, but I noticed most of the jerseys that they're wearing now, they have the number on the front and the back. Have you noticed that?
Yeah, they're front.
Oh my God.
New TRID rules and closing on time.
Yeah, the real field jerseys are a couple $100.
Yeah.
And my brother's got one. He said, "Don't get them; they're miserable to wear."
Wow.
He said the problem is that
this is the kind that I've got, but it's in that gray.
Yeah, that's what I've got. He said the cool base ones are the good ones to wear. He said the problem is the numbers are so stiff.
Yeah, right.
And when you sit down, it's like you're sitting on a bar stool, and he said you feel like a turtle.
Yeah.
And he said they're hot too. They're thick and they're hot. But yeah, these cool base ones are the ones that civilians get.
I think part of the problem is that there's...
Yeah, I want to get a white one with the World Series patch on it.
Yeah.
We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market.
Oh, yeah, look at that. Yeah, because look, it's got the World Series bound. Oh, it says World Series bound, right? That's World Series bound, but not World Series, right?
I think it's the same. I think it's that same thing as long as it's got... I wish they had the strong patch on the front like the guys are wearing.
Yeah, right.
Founded by investor Jeremy Humphrey to do just that. Principal Inspections works from the investor's point of view, providing affordable, fast, quality
I might as well order it tonight. I want to get a jersey that says strong on the back and then the number 17 for 2017.
Principal Inspections will save you time and money. Call Principal Inspections.
Yeah, it's almost like this, but in the blue.
In the blue, yeah.
I wonder if you click on this.
Will it give it to you in blue?
Are you looking for an investor-friendly general
Other products
contractor
related
for
to
your
this item?
investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track
Oh.
Remodeling specializes in turnkey
It's funny.
remodeling
Here's
of single-family investment
that's it.
properties,
Yeah.
whether it's a
But it's like you can't order it.
rental rehab. No more managing it yourself. No more doing the work
Let's see if I say
yourself.
this,
Fast Track Remodeling
and then
really
add
does
the
manage it all.
cart.
So give us a
Does
call
it
today
give it
at
you the option?
832-742-9992.
That's size option.
Are small returns getting in the way of your retirement plans? Why
1
settle
minute.
for
This says
losing
Heather
your home?
Navy
There's a
Digital
better place to
Fleece.
invest. The experts agree, single-family real estate is one of the best investments you can make. Find out how JB Fund Services offers a 9% preferred return and up to a 13% waterfall.
You can
Call
do
us today
custom,
at
right? With the cool base ones? Oh, yes, you can.
281-915-0906 or visit our
this is
website,
sweet.
jbfundservices.com. That's 281-915-0906. This investment is offered to accredited investors.
Though I do like the orange.
This is Business 11.
All right, gentlemen.
Call Jason or
This
Tom
segment's going to be super, super short.
Yeah. What are you trying to say?
Whatever.
All right.
Stand by.
Live at facebook.com/RightPathRealEstate.
Hot mics.
All right, guys, we got a couple of events coming up. We got one coming up tonight. I'll be doing market predictions at the Real Acquisitions meeting. Yeah, go to rightpathrealestate.com.
Rightpathrealestate.com.
And then I'll be doing an event Thursday night on how to raise all the money you need.
I'm doing the subliminal.
Yeah, that's right. We're going to get a cat. We need cash cannons.
Yeah, right.
We need cash cannons when I do the money stuff. So, rightpathrealestate.com. We'll see y'all Thursday night. That's it. Come see us in.
Yeah, rightpathrealestate.com.
Don't wait, guys. I don't know what you're waiting for anyways. What are you waiting for?
Yeah,
I don't get it.
Yeah, what's interesting is we've had people say, because we look at Andre, and Andre within 90 days of getting started in implementing, he came to our weekend retreat, implemented what he learned. He bought, now these results are not typical, okay? So that's my disclaimer. So and I'm not making any kind of income claims or anything like that, but he bought 22 houses.
Yeah.
And made $189,000 within 90 days. So if you knew you had the possibility of doing that within 90 days from when you start, I think I have freedom in my calendar next April.
Yeah.
So I think I'll put it off to then.
Yeah, put it off.
Yeah.
Go for it.
In fact, actually next August would be better. I'll start then. And it's like, why would you want to wait?
I'll tell you, when I started learning about this kind of stuff, and then when I started figuring out, I'm like, I'll never forget. I'm sitting in a room, and I'd been learning real estate for about 3 months at this point, and I'm like, I can't buy houses fast enough. That was my first thought.
Yeah.
Now that you've been exposed to this, it's like, why am I not just buying? I need to just be buying.
Yeah,
So-
what's going to be fascinating is today and tomorrow we're actually getting back together again with two of the people that were in the original mastermind that you and I, where we basically
that's right.
got the vision of what Houston house buyers could be, and wow, what a difference the last 4 years have been.
Yeah, it's crazy. So, rightpathrealestate.com. We've got an event tonight. We've got another one tomorrow night. Just go to
The
our
one tomorrow night,
event page.
$99.99 Westheimer.
Yep, we'll see you guys there. And thanks for listening to the show. Tom will be in studio tomorrow. Build your team Thursdays. We'll go from there. Thanks for listening, guys.
Thanks,
All right,
Nikki.
fellas, have a good day. You're welcome.
All right, bye.